All right, I think we're live. Hello, everybody. Okay, got everybody coming in here. Um, Welcome to the Perps on Sui X stream. Today, we're spotlighting 5 teams building Perps on Sui with different types of Perps. We got Aftermath, Astros, Bluefin, FlowX, and Zoe. Each one has different approaches to on-chain derivatives, from fully on-chain to hybrid models to completely off-chain models, aggregators, tons of different ways to build these perps. And I'm excited to kind of dive into each one of these projects and talk about their why they made those trade-off decisions, how their perps works, and how this kind of enriches the entire Sui DeFi ecosystem. We'll also talk about how Sui's parallel execution and low latency and the benefits that it brings to these perp protocols. Aslan. I will be moderating this stream, and what I would like to do is kick things off with panelist intros. I'll kick it off to you, Aram RTX from Aftermath, the Aftermath intern. Can you give me a quick intro and what you guys are building?
Yo, how's it going, guys? Thanks for having me here, Aslan. Yeah, so we're building a fully on-chain perpetual product with like the matching happening on-chain, and like the whole system lives on Sui, so there's no kind of off-chain order book and settling on-chain.
All right.
That's it. I mean, go into more details. It gets obviously a little bit, a lot more complex than that. But in essence, the rules of the game are governed by the validators, the Sui validators. So there's clear set rules that cannot be like changed. So I guess that's like the big thing. Everything's enforced by the validator set.
Yeah, I mean that's as transparent as you can get, really, if you have everything on chain. And I think it's good to have variety, and a fully on-chain purpose is an interesting approach. I'm excited to kind of dive into that a little bit more. Next, Jerry, can you give us a quick intro and tell us a little bit about Astros? I know you guys are live now, right?
Yes, we're live now, but we are like currently in like still in like soft launch phases. So that means like we're not exposing like all of our features. Yeah. So yeah, hi everyone. I'm Jerry, like founder of Astros. So let me give a quick introduction to Astros. So we are actually incubated by Navi, and Astros was created in like October 2024. I think we began like developing the like perpetuals I think last year, like back to December in 2024. Yeah, and now we are in soft launch phase 2, which means like everyone has like the access, like to use perps inside Astros. Yeah, the idea is like we like since the project is incubated by Navi, we want to like fully like utilize like the deep liquidity inside Navi and provide more like capital efficiency, yeah, to the whole community.
Awesome. I'm looking forward to diving into that and understanding exactly how those integrations work. But for now, let's go to Rabil. Rabil, you are running Bluefin, and that is currently the leading perp on Sui, and you guys are doing some crazy volumes. Can you give us a brief intro?
Yeah, I'm Rabil. I'm one of the founders at Bluefin. We've been building now we're drawing up to 5 years, and Perps was our first product. So it's gone through multiple iterations. It's been on other chains. It's gone through multiple versions. We've worked with most of the major market makers and have really like built the system to work for them. We've worked with larger retail groups in different parts of the world. So yeah, I've had a lot of experience building perps for now, roughly 3 years of being live on mainnet with them. And now we've also expanded through other product verticals. So we have a spot AMM, we have a spot RFQ, we have an aggregator, we have lending supported as a JV, we have structured products. So really just building that full spectrum product. And that's really what we see in CeFi too. right? Most of these exchanges build the full suite for users, and really like that's how we're seeing now most of the growth come through, like having the full stack, users coming on for spot, switching into perps to trade them.
I love it. Yeah, there's a lot that you can do when you own the full stack, and you can combine them in very interesting ways. We'll be looking forward to diving into that as well. Neville, you guys recently launched your perps, and you guys are looking into kind of converting that into a perp aggregator. Can you give me a brief intro and a little bit about your product?
Yeah, thank you for having me today. Hi, everyone. I'm Nevin from Floyd Finance team. We have been building decentralized chains on Sui and Dex aggregator for a while, and now we are trying to aggregate everything for the Sui users. So we are approaching to build an perp aggregators. We can aggregate every liquidity on every ecosystem, like even Hyperliquid on Aster or every perp exchange in the blockchain space. So we are now at the beta space, so we only have the Hyperliquid at the moment, but the vision is trying to aggregate liquidity on perps on every chain, on every network. Thank you.
Yeah, perp aggregators are quite interesting. I think you can do a lot of interesting different strategies between funding rate arbs and stuff like that if you have access to all the different perp venues. So that's an interesting one to explore. And finally, Theo from Zoe, can you give us a brief intro and a little bit about Zoe?
Yeah, for sure. Hey everyone, I'm Theo. I'm the co-founder and CEO of Zoe. So Zoe is a trader-to-pool model, fully on-chain perpetual protocol. We actually started with a different name as Pseudo. I think we have been running it for almost a year and 9 months now. So the core features on us are we are basically supporting the liquidity with the pool and LP tokens, right? So I think if you look at the perps across the ecosystem, we're probably the only one that can support Sui as the native collateral when you open a position. So for LP products, we support like Sui as like one of the major assets. And I think if you deposit Sui into our either SLP or CLP pool, you may be earning around 100% in Sui yield for the past year. And we also have a pool that supports only stable because like the assets can be volatile, and I think some traders prefer having a stable collateral to avoid complex situation with the liquidation. But all in all, we are pretty retail focused. We support a lot of like native Sui tokens, perps, our protocol, and we have been generating a lot of volume and fees from the top trading pairs like BTC, Sui, and ETH. But yeah, in short, that's so
awesome. Yeah, thank you guys for those intros. That was again Aftermath, Astros, Bluefin, FlowX, and Zoe. I'm excited to dive into each of these protocols because each one of them have made some decisions, some trade-offs that are totally different from one another, and that provides a different UX to the users and different kind of guarantees to users as well. And I think a great first one that I want to dive into would be Aftermath. RTX, you said that you guys are building. First of all, when is it coming? Let's can you set the record straight? What is it happening this year?
No, it'll probably happen in like 2 weeks.
Oh,
yeah, I would say 2 weeks. I would say Thanksgiving it'll be live with like 4 or 5 markets, I think. But yeah, it'll be live around Thanksgiving for sure.
Let's go.
So it's been a long journey, but yeah, sorry, don't want to cut you off.
Yeah, building on fully on-chain perp is not easy for sure. But yeah,
great.
Super excited to see to see it launch, and excited to see what kind of assets you guys have on there, and what kind of experience you guys can offer. But can you tell me why you guys decided to do it fully on-chain instead of like the hybrid model that has been kind of the most
So I mean, this all kind of started in 2022 with obviously DYDX at the time was the leader in these kind of hybrid order books. The really issue is like the API becomes like the choke point with these models, right? Like the API kind of controls access to the book most of the time, located somewhere in Tokyo, and essentially you have, you know, your set market makers who kind of have preference to have access to the API quicker, or there's just really kind of funky things these games that you can, like timing games you can play. And so back then we were trying to market make on TYDX, and like we're getting a bit frustrated. And obviously we were like professionals at it at the time, but still we could kind of see like there are things that there were just things that weren't fair. And we decided to kind of see if it was possible to build something like on chain where like there would be no choke point from that part, meaning that like you didn't care whether someone had API access or not. Like anyone could have access to the book, and that would create, first of all, thicker books. Like you would have sometimes situations where you have massive divergence. Like Rune at the time, we were trying to trade Rune, and like there was no one there on the other side. Like the book was completely empty. Like funding went absolutely nuts, and that was really because you have these kind of like prioritized market makers who weren't active a lot of times on these certain other assets, because it just depended on like whether they got paid enough and whatever. But there was that annoyance. And like if you're building these kind of systems like really on chain, they become way more composable, meaning you can have more people providing liquidity outside of just professional market makers, very similar to like how GMX at the time was allowing people to just kind of become counterparties in a trade. And so that was kind of the idea, kind of started this. And then it really started focusing on, okay, well, what does gas look like? There's so many orders and cancels that have to happen at the same time at insane scale. Like no one wants to deal with toxic flow. And it was like all these like problems that you had to problem solve, where you really didn't think about that with these hybrid order books, because again, you had full control of the book, you had control of who had access to the book, you had all these kind of parameters that you kind of could gatekeep, versus this other way where everyone has access, but then you're also exposing the protocol and its users to like nefarious actors. So that was the main thing, right? Is like it's very similar to like these L2s, right? These things are really, these sequencers are really gated, and there's only like one team that has access to it, and so they can kind of dictate how you're matched, how your orders flow, and all these things. And we were trying to get it to the complete opposite, to actually like, I was very inspired by GMX, and it's like trying to get it to the same point of like what GMX is like anyone can deposit, anyone can become a counterparty, and you're going to get way more people through, you know, Hummingbird, like Hummingbot, CCXT or whatever, trying to provide liquidity to all these markets, right? Because they could try to head somewhere else or just farm funding. It becomes way more compelling. So that's kind of the idea why we started. SWE wasn't the first choice, but it became the best choice because of like how the DAG model works, and like you have these different markets not competing with each other, and you have like which becomes like much better price discovery. And then obviously the storage rebate, where you can like get money back from like deleting things. So like these things all added up to being like a really good design. It's obviously taken a long time. Totally aware it's taken a long time to get there, but that's the an essence of why we wanted to kind of create the system. Is like we believe that if you're going to have like thicker books, you have to have more people participate.
I'm totally with you on that. I feel like if you reduce the barrier of entry to just participants, and the easier you make it for them to participate in more like systematic ways, the more kind of diverse activity you're going to get. What you don't want to do is end up in a situation where you only have market makers just competing against each other with not really a good way for just regular average kind of searchers and whatnot to
totally. And it goes to the liquidations as well. So we liquidate to the book, and users can get better pricing because of someone else's liquidation. They can also pick up liquidation. So we didn't want to gatekeep any of these things, and it really came down to like designing, like really spending a lot of time and figuring out like how to design this to be like obviously gas efficient, but like how do you kind of have this on like on a generalized chain? And like there's been a lot of updates that Deepbook has done with like RGB to make it like actually possible.
Yeah. That'll be one of the other things that we do more of, right? Like, what kind of additions do we add? What do we add to Sweet Core to make it more DeFi friendly, to make it more HFT friendly? And I think the experiments that these protocols and the data that you guys collect will definitely help make some of those decisions. One other thing that you mentioned is the composability aspect of it. When you have everything on chain, exactly, you can combine transactions that are touching like other exchanges with the Perp exchange to kind of create this atomic positions with combine like spot and Perp at the same time.
The positions are all tokenizable, so every position, the perpetual position, is tokenizable. And an AFL, like the liquidity provider, which again we built like a very similar model to HOP and lighters, and all what they're building, essentially just a place to deposit that places orders on our books, and that vault is also tokenizable. So both positions are tokenizable.
That's interesting. Tokenizable positions. You can do a lot of things with that. You could, that's super interesting. I'm curious to see what that's going to look like. But that's we can save that conversation for when you guys launch. Awesome. Thank you for sharing all of that, RTX. I want to go to Jerry from Astros. You said you guys are in your soft launch 2, the second phase, and you also mentioned that there's going to be some sort of incorporation with Navi protocol itself, the lending protocol. And I'm not completely clear how perps and lending go together. Can you kind of touch on that and how that would work?
Yeah, sure. So before I go deeper, let me share like a small story about like why even we started Astros. So I think 3 years back, Alice Gold, Charles, and I, like, we had the idea to like build a lending protocol on Sui, right? That like we like even I think we are like building our like TVL like a volume, I think in a good pace. But I think one thing is like we kept like seeing the same issue. The capital efficiency was still very limited. Like user had like an idle collateral. And liquidity was like fragmented across assets. So and like every step, like lending, like borrowing, withdrawal, like deposit, you will require like multiple manual steps to finish, right? So that's when I realized like we actually need a more unified and more like efficient capital layer. This is actually how like Astros was born, like not from like wanting like to build a perplex first, but we want to really like resolve the issue of like the capital efficiency. Yes. And I think the second perspective is I think Perps can also create like new use cases for our like existing lending users. So let's say if someone deposits like their like Sui or Ethereum or Bitcoin like into like a Navi lending pool, they are usually like doing a long position, right? Like sometimes like markets are volatile, like right now, like during like October November timeframe, right? So many users like they may want to like short like do like some kind of like hedging, like doing like a short-term short on our platform. I think like with that being said, I think Perps will be the like the best destination for them to protect their positions. So let me quickly share my screen right now. I prepare like a very simple slides. So I think I will just go to this part. Are you guys able to see my screen? Asan,
yes.
Are you able to see the screen? So this is how we actually like connected Astros Perps with like Navi lending. So we are trying to like build a primary like prime brokerage model on chain. So like two major features. Like first thing is like automatic borrowing and automatic yield. So on Astros, like when a user opens a position, the system can automatically borrow assets from lending pool. So this doesn't mean like you every time like you go to open a position you have to borrow. But I think this basically give you like a second choice if you don't have much like liquid like USDC in your hand. I think like Navi can support you on this. And then like you will be able to place the position without any like manual borrowing steps. Like you don't have to actually like go to Navi, like borrow the asset, like because Astro and Navi, they are connected. So this is like a very much like convenient. Yeah. And then the system can take multiple assets as collateral, like Bitcoin or Ethereum, because like once you like, I think this is how like things will work. Like once our system detects you have like supply positions on Navi, right? It will like decide how much like margin you can get to like to open your positions. Yes.
Wow.
So yeah. So yeah, and okay. Sorry, I think this is a little bit okay. So yeah, and then if the user has like idle collateral, Astros can automatically place into lending or like ARP. So ARP is a vault we're building for months, and it will be released in December. I think the way is like it works same as the Hyperliquid vault, but I think like in a further step, it can also be benefit from like lending side. Yeah, so like users can earn yields like while trading.
Okay.
And yeah, second part is like we have a like a unified capital, like not just like for users, but also for traders, like a market maker and the entire system. So based on my observation, so right now, like in Perps market, I believe like more than 100% of like of users are actually doing like they're not gambling. Instead, like they're doing like a more like smarter strategies like funding rate arbitrage, like to gain like a very like stable income, right? So yeah, so unlike like typical perps, like where the liquidity is isolated, we are doing the like the share liquid layer and like the share capital pools for leverage. So basically, it combines the liquid like in the lending side with the perps. So like if you are a big like market maker, like sometimes if like a market maker want to support the order book for like a single token pair like a SUI USDC, it always like requires like more than like 10 millions of USDC in cash. I think this is kind of a wasting like capital efficient, right? Like if you can like have those money like generating yield, like why not like putting them like idle, right, in the perp system. So yeah, with this unified like capitals, like the market maker, they can put like a very large amount of cash, right, which is planned to used for like market making or like funding rate arbitrage, like yeah, in Astro to generate like a second layer of yield instead of like yeah, like just like putting them inside the deposit pool. Yes. Okay.
Incredible.
Yeah.
So essentially, you are allowing users to kind of get dual income on their collateral on Astros. Like you're essentially allowing their lending positions to be used as collateral, so they can also further trade on Astros. And instead of having them, fragment their liquidity and use lending separately and use perps separately, you're combining them into one and kind of maximizing the usage that each dollar is generating. I think this is super interesting. What Hyperliquid is trying to do, for example, with their USDH is similar to that, right? They realized they're not getting any yield on USDC, so let's swap it out to a yield, a stable coin that is generating yield, and use that, and that's extra income. And this is kind of a similar idea. Why let the capital sit idle in the LP when we can deposit it into lending and have it earn extra revenue? Okay, I like this, and I like the other thing that you mentioned. If you have just a long position just sitting on lending, and you just want to hold some position, but maybe in the short term you want to, if it spikes, you want to place a short position on perps. You don't have to take out your lending position, sell it in spot, and kind of hedge it that way. You can now hedge it directly on the perp by just opening a new position without touching the underlying lending position. That's super interesting. That's there's a ton that you can do here, especially given the fact that, lending positions have different yield compared to like funding rates. I'm sure there's a ton of arbitrage that can be done between those as well. Very cool, very cool. I'm excited to see more and see exactly how Navi and Astros combine to kind of create this new level of capital efficiency.
Awesome. Thank you, Aslan.
Yeah. Thank you for sharing all that, Jerry. Speaking of super apps, I think this is a perfect segue to Bluefin, which I believe, Rabil, tell me if I'm wrong. There is a vision like similar to this one for Bluefin as well. Maybe a totally a different type one, but I do know that you guys are now combining, for example, your vaults, your Ember vaults with lending, and maybe there is a story with the perpetual side as well. Can you tell me a little bit about? Well, maybe we start from step one here. Tell me a little bit about what has been going on with Bluefin lately. What you guys are up to, and how are things evolving over time for you guys?
Yeah, for sure. Look, we like to build product, and that's what we enjoy the most. And so typically the focus is product-led growth. Even within Spot, we've built 3 internal products there. Within Perps, we're constantly iterating, and now a lot of the focus is like, okay, we have all of these products. How do we create a compounding engine? And that's where a lot of these structured products are coming into play. Similar to how Jerry was saying, we're already starting to combine these products through certain structured products. Can an AMM position be partially hedged on Perps and earn a funding rate payment? We're starting to see early levels of basis trading. There are still some challenges, right? Like funding rates are only like 13% on assets like BTC, SWI, and ETH. And then the other assets like Wall and Deep, where lending rates are really high, funding rates are negative. So it doesn't really work out. So I think we're still like playing around with it and trying to connect it. But as the ecosystem grows, as more traction comes in, I think we'll be in a strong position to be able to leverage some of these things together.
Awesome. So is there a vision for Ember vaults and like the E tokens to be used in Perps in any way, or is there something that we can expect specifically in the coming months for like how you guys will combine some of these different components of Bluefin?
Yeah, I think like Perps, we think a lot about the risk engine, right? There are challenges when you integrate with lending. When you hypothetically, let's say lending was integrated with it. Lending markets have like an LTV of like typically 70%, right? That means intrinsically, if you are using it as collateral, you're already taking a 30% haircut by using it as collateral. What happens if something like October 11th happened on the platform?
Mm-hmm.
Right? It would pretty much take down both protocols, hypothetically, assuming liquidity disappears. There's steep haircuts. Spot liquidity might not be there to like swap these assets into the margin token. So it's a little bit more complicated, and we want to make sure at the moment, like we have so much product now that we're really focused on hardening and security. Nothing has happened on our platform in the last 4 years, and we want to make damn sure that nothing happens going forward. So risk management is a pretty core area, and that's why at the moment we're keeping it pretty straightforward, right? USDC as collateral, maybe as one of these yield-bearing stable coins comes into the ecosystem, we can adapt that and as an alternate. So that's something we're thinking about. But apart from that, we are trying to minimize the risk, because like MMRs on Bluefin are typically it's a 1% MMR on BTC, for example. So the margin for liquidations is super tiny, which is amazing for traders, and liquidation prices are really low. But the way we keep it at that level right now is keeping the risk system robust and keeping it simpler. Now with Ember, what we're trying to do is it is a layer on top, right? Where the structured product can run on Bluefin. It can run on any other exchange on the ecosystem. Like you could run a structured product between us and any of the protocols over here. So there it is like a flexible layer. And I'd say like with Ember, it's really up to who the manager is, right? And the ability of that manager to determine how good of a strategy or what the strategy looks like.
Yeah. I think you raised a very important point here, which is the risk management component of this. We have to recognize that like the vaults themselves are sometimes doing some looping strategies within them, so they do have a bit of leverage, even though that's good leverage because it is the same underlying asset that's being looped. But it is important to recognize that combining leverage in a bunch of different ways, and hiding it is not good. And I think an example of this is what happened recently on Morpho, right? They were essentially taking some of the vaults and then like packaging them up and looping them again on another layer. Definitely the risk management component is super important. And yeah, you guys have definitely done well on weathering the storm on October 10th. Cool. And for Bluefin specifically, how do you guys see the growth in terms of like what kind of users do you think will generate the next level of growth for Bluefin or for Perps in general, perhaps? Do you guys see it changing between like, is it just all degen users all the time, or are they getting smarter, or are they like executing smarter, making better decisions? Or how is the kind of a perp landscape evolving, given you guys have been been around the longest here?
Yeah, look, like we've been here for quite some time. I think your user base before your token is very different from your user base after your token. And I think the real test of a Perps platform oftentimes is after the token's launch and all of these farmers are kind of out of the way. The way we're thinking about it is also, I think we're taking a very holistic stance to our company, our product, Perps in general as well. That you want to cater to all parts of potential users, right? There is retail, for which user experience is really important and certain features are needed. There is institutional traders, and we work with a lot of them, and they have certain requirements on how margining works and how they execute their trades. And now we're entering structured products as well, which is enabling a new type of organic yield and strategies on the platform. So really trying to to the best of our ability cater to all segments and build the best Perps product and overall broader company and product in general that gives people what they want across whether it's spot, someone wants to run a basis trade, someone wants to open an AMM position and short part of it on the Perp side. And that's how we're thinking, like, hey, how can we just build the absolute best platform for all of our products and try to grow our user base as much as possible holistically? And if we do that, Perps will also continue to grow.
Yeah, I love it. Thank you for sharing all that, Rabil. I think one of the kind of things that a lot of the Perps exchanges are missing is the kind of other components, like the AMM, the lending, and the vaults, and having all of those in one place, similar to what Navi's doing as well. I think does allow you to get a more diverse set of users onto your platform.
Yeah. I'll add to that the amount of Perps traders you're going to get is an order of magnitude lower than the amount of spot traders you have. This is like a generalizable statistic right across most ecosystems. Hyperliquid has 20,000 daily active users, versus if you look at spot dexes, they might have millions, right? Over crypto. And so, all right, there's already a small set of users. So what we're trying to think about is okay, how do we make the funnel as big as possible, which is right now captured a lot by spot, right? The the AMM captures a ton of user flow. And then how do we make it very easy to pass that flow on to Perps is how we're starting to think about it.
That's a really good way to think about it, because yeah, the Perp flow is a lot more valuable than the spot flow. But if you have a good way to funnel spot flow into Perp flow, yeah, you can definitely make a very profitable product there. Awesome. Yeah, thank you for sharing that insight, Rabil. Neville, I wanna come to you next and talk a little bit about FlowX. Okay, so you guys launched your front end for the Perps aggregator with initially. Can you first of all tell us a little bit about what the product is right now as it stands, and what is the vision with the Perp aggregator component? What does that look like in the future, realistically, and how do you plan to kind of execute that vision?
Yeah, so as I mentioned earlier, we are still in the beta phase. So we now only have the Hyperliquid as an next as our aggregators too, and for the reason is we want to become the trading platform that can aggregate every liquidity on Perp from many other ecosystem to users. Uh, why it that matter? Because we think that aggregation is very much even more matter compared to the spot aggregation space, because of in the nature of perp trading is leverage, right? And the result is that everything in your plan is multiple, not just the profit or the risk, but also the cost while executing the trading plan. A trader, we need to calculate every aspect like the trading fee, the funding rate very carefully to make sure the cost, right? And maybe even after maybe some kind of high frequency that calculate it not so very, very carefully. The cost, the where to pay the here, and this is not time job because of the fee are using changing the frequency. Try to have users to try to then with the getting fee from that we already get it.
So you mentioned you allow the users to choose which venue they want to execute their trade. Is there a world where you actually aggregate the venues into one meta venue and automatically maybe even distribute a position into different venues, but just optimize the execution for the user, essentially like optimize the price that they're executed at, or maybe the funding rate that they end up paying by choosing the venue with the lowest funding rates? Is there a world where that would be possible? I know that's a super complicated problem to solve, but I think that's a very interesting one.
Yeah, I think that the most simple version that we are trying to provide is we only want to routing the full position of the user from the next. We have the the cheapest on the fees side and the funding fee too, and the luckiest in liquidity depth. And we're not trying to split the position into multiple decks at one time from the for the first version. So basically, we will allow users to choose between the public that we already integrated, but by default, we will choose for them the cheapest one.
Mm. Okay. So you are already giving them the best option by default.
Yes.
Okay. Awesome. What are you in the process of integrating other perp exchanges at the moment? What's coming next?
Yeah, actually, we are trying to improve the user flow and providing more tools and giving the better insight for users to make the trading activity first. Because of, after we release the version with Hyperliquid, I think the liquidity depth on Hyperliquid it already served the demand for our user right now. And the next test and the next challenge we want to push up the volume and push up the user base first by providing them with better insight, better information first, and then even after we see that we had some feedback from users that they want to make some trading activity on more SUI ecosystem to kind of like Walrus and Deepbook too, and so we are on the process to trying to integrate the SUI native public in the right now.
Awesome. Yeah, I'm looking forward to seeing how that turns out. It would be awesome to get like a bunch of different perps exchanges in one venue. Thank you for sharing all that, Nabil. I want to go to Theo next with Zoe. Zoe is, you guys offer slippage-free trades or zero slippage trades. How does that work exactly? Can you tell us how you're able to do that?
Yeah, for sure. I would say it's like near zero slippage. So I think if you look at like the current trader to full model like JMax or Jupiter, right? What they mostly do is they consume price from third-party oracles, right? So that's exactly what we do. So basically, when you settle the trade, we get a price. For instance, we're using Peace mostly, and then we kind of do some checks internally. But basically, you can fill a large order with the price you get from the oracle, right? So that's how we achieve almost close to zero slippage because there's no order book to match. You're just matching it against a price source from a third-party oracle.
Okay, no order book to match. I think that's the unique that's unique to Zoe that it's that we don't have for other perps exchanges. So, are there any risks to not having an order book? So I'm assuming there's a massive dependency on Pyth here, but Pyth is pretty good. How you mentioned earlier that the SWI vault has like 100% APR. So does this mean that like you guys are actually very good with the actual price execution on these zero slippage swaps or near zero slippage swaps?
So I think, zero slippage is a great feature, right? But there always comes with some costs, right? I think the cost here is that we have to be very careful with the price we ingest from Peath, right? So we've been doing a lot of research recently. So we've been also looking at like the toxic flows happening on the platform. Some of them are like maybe they're just trying to take advantage of like a price move that they observe on a central exchange, and then they use probably a slower price speed from Peace and open a trade on us, right? So the direct counter mechanism we have is to enforce some like holding duration, or we charge some extra fees if you want to like trade a position in a high frequency trade. So that's like the cost we have to live with at the moment. And we also done research on how other protocols do it. For instance, StreamX, I think they have a price impact mechanism to basically ensure the OI is balanced and make sure like the scalpers cannot just like take advantage of the Oracle lag to profit. So a lot of improvements are being built on our end to make sure to do similar things, right? To check the Oracle price, make sure it's up to date. We're talking with Peace to probably utilize their Peace laser feed to make sure we get the latest contract price as latest as possible. So for the LPs, I think in most cases it has been like generating decent yields, right? But there are certain times where we saw some like traders, they're able to like take advantage of a volatile market movement by opening a position as a preferred price and then profit. So we are putting a lot of efforts into making sure those cases don't happen as often. I don't think there is like a definite way to like stop every like scope trading. But I think what we have right now is sufficient enough to like cover to make sure the scope traders cannot profit as much and protect the yield for the LPs.
Awesome. Yeah, I think the making sure that you kind of hold stable during volatile periods, that's going to be the most important part here. Tell me a little bit about the intelligence module. I think you guys have some sort of AI component, if I'm not mistaken. Can you elaborate on that and what kind of tools you're offering to traders?
Yeah. So for now, we have a assistant on the front end that basically can answer you some questions around like the technical analysis. So say you want to look at SWI, for instance, for the past week, and you want to look at MACD or RSI indicators, right? It can generate a graph for you directly. So we hope that can help the traders to understand the market more and get like the technical indicators they want to make decisions on trade. I think what we plan on to like doing next is building trading agent that can fill the trade based on certain conditions. So it's going to work as we probably will set up a custody wallet for the trader. It's going to be like controlled by the wallet, and basically the trader can tell the agent like what kind of strategy they want to execute. For instance, they want to trade based on RSI, MACD, or do some like 5-minute strategy, right? And I think the agent we're just going to make sure he has the knowledge of like doing different strategies. So we probably will have some template in the back end, and so we can draft those like strategy for the trader. And on the back end, just gonna automatically trigger trades based on the conditions that's like preset by the traders. There are some other features we're thinking, for instance, like helping you to like deposit some collateral when the liquidation price is like near a certain percentage, right? So a lot of automation can be done powered by the AI agents to like make trading perps safer and easier for traders.
That's really cool. So you mentioned that you can maybe in the future set certain settings for like the different technical indicators and allow it to trigger a buy or a sell when certain conditions are met, like, and that would happen automatically.
Yes, that's the idea.
Wow, Yeah, that's really cool. I have to I'll have to check that out. I think one of the struggles with like technical analysis is, yeah, you can draw these charts, but then like you actually have to wait until certain conditions are met, and then have to wait for the good entries and whatnot. So if you guys are able to kind of automate that process, that's really I think it gives an extra edge for these active traders.
Yeah, for sure.
Awesome. Thank you guys for sharing each one of you guys on the different protocols that you guys are building. I want to kind of dive into maybe a debate session. Let me think here. Perhaps. All right. Here's what I'll do. Let's do a round of from each protocol, and tell me one trade-off that you guys have made for your protocol that you feel is the most important trade-off, whether it's deciding to have it fully on-chain or hybrid, or Oracle based versus order book based. Yeah, like what's one trade-off that you guys feel the most strongly about, and a reason for that trade-off, and we can just go around the circle here. I'll start with you, RTX.
The biggest one I would say off the bat would be, we initially can our only isolated margin, which sounds good after 1010, but that is a trade-off we had to do to maintain low latency until there's some upgrades with like the move VM. But that is a trade-off because we are we have to consider latency and gas costs. So that was a legitimate trade-off. We had to like say, okay, we can't launch both. We have to launch one. And it's really funny that like Purple, which is a trying to be an on-chain perp dex on Monad, they also are launching with isolated only. And it's like, oh, that makes a lot of sense why they're doing that. Using U256 is insane. But like the fact that they also had to kind of like take the same approach, like looking at it and like, oh yeah, like that makes a lot of sense. So that was like that's like the main trade-off we have had to kind of accept at launch, of like being isolated only.
In my opinion, I think that makes perfect sense.
Yeah, after 1010, totally. Like I'm with you, but you have to understand a lot of, and you saw a lot of leverage is really just built up by 20 people being long short of the same thing, and
yeah,
which is great, right? Because that builds up OI. But yeah, I mean that's the biggest trade-off. It does help in some aspects with some like very low liquid tokens to list. But yeah, I mean that's basically it. I think off the top of my head, the easiest one to translate would be that. There are things that we had to build to get around stuff like Theo talking about Pith. Like Pith has been a massive struggle on Sui. It's very expensive. The updates are extremely pricey. And so we had to build like our own perpetual Oracle aggregator that we like rerun, and we can like source different feeds from. And so we had to deal with, we had to build that. And also after 1010, again, makes a lot of sense because if there's one feed that's acting up, we don't want to like hurt all our users for that. So yeah, that's I would say that's like those are the big kind of things that we had to come up with.
Yeah, I think launching with isolated markets is totally is a natural first step, in my opinion. I believe at some point even Bluefin had isolated markets before Bluefin Pro came out. So
that's interesting. I didn't know that. Why is that? Why did you guys have to make that trade-off if you're not dealing with gas?
It was just easier to launch quicker with isolated. Like now we have a hybrid cross and isolated margining engine, and I think it helps improve liquidity a lot. But it was like our thing is like, let's launch things as quickly as we can, get it to market, and then iterate and continue to build the best product. But it was just something that allowed us to, at that time, launch the product faster.
Awesome. Yeah, Jerry, what's one trade-off that you guys were on the edge about, but was you felt strongly about, and that you guys made for Astros?
Yeah, I think I'm not sure if I can say this is for trade-off, but I think like one of the biggest like regret I had is like we're like right now still using like the off-chain matching system. So like Hyperliquid, like everyone like I think like getting the trade on chain is actually the main narrative in this cycle, right? I think at beginning like I think the whole idea of the perp is to like service our like lending clients and customers better. So actually we didn't spend a lot of time like investing like how do we do like a on-chain system perps. But I thought that's gonna like drop the performance until I try like Hyperlink and then like Aftermath, even though they're doing like the testnet. Actually, like I think Aftermath is doing a really good job on like improving the like on-chain like trading performance. I don't think like I cannot even tell like if this is like doing like off-chain matching or like a on-chain matching. It's like a super smooth, super fast. Yeah. So, but I think I think like but not, like by not like investing time of like investigating and developing like a on-chain system, we got more time to focus on like the lending integration side, like thinking of how do we like maximize like the capital efficiency. So yeah, still, but I think like in the future, I think once we get the lending related product online, we will think of like how do we become like more transparent, and we will do like more on the like on-chain side. Yeah,
Love it.
Can I
Yeah.
ask a question? Jerry, how would the lending integration work if there's like a really large liquidation? So because like, so hypothetically, let's say you're using 60-70% of the value of your collateral there. That collateral gets liquidated at like an LTV of 70%. And you're like trading on leverage on perps. Like how does the margining system work there?
so I think right now what we do is like we're giving I think like a lot of like restrictions at version 1. So right now like I think the only collateral we are supporting is like a SUI, like a stable coins or like ETH, and we're giving restrictions on like the initial margin you can get. Yeah.
Okay, but even if
I think
it's
that-
SUI, like let's say I have like $1 million of SUI dollars that I put on Navi, how much of it can I use as, and it's liquidatable with like SUI has what, like a 70 or 80% LTV. So that's like the liquidation premium. How much of it can I use as collateral on perps?
I think the margin on the lending side is like way more different than like perps. So let's say for lending you have like 70% like LTV. So it means like if you have like 10K of SUI, like $10K worth of SUI, you can borrow like 7K or 8K. But for perps, it's like definitely not the case. Like we're setting like the relative like LTV to like maybe like a 10% or 20%. I think the primary goal is like for you to hedge your position. So in Virgin, right, it will put us in a like safer position. Yeah.
Got it. But if it's 20%, so let's say like I have 10K, I'm only using 2K of collateral. What happens when you lose the 2K? Do you get liquidated?
Do we get liquid? Sorry, what do you mean? Are you referring to like the perps position or like the supply position in lending?
Yeah, let's say like you have a 10K sweep position that goes like on Navi that uses collateral on lending. Sorry, a 10K position on lending on Navi that uses collateral on perps. Let's say like you're using 2K value of that 10K as collateral. What happens when like that 2K value is gone?
Yeah,
Like,
then I think like I think right now what are we gonna do is like your like supply position will be deducted too.
Okay, got it.
Yes.
Okay. So it's essentially like you are borrowing. Okay, your a portion of your supply gets liquidated. There's probably something interesting that you can do of like, all right, actually borrow USDC and then use USDC directly as collateral, and then figure out some sort of solution to liquidate that like separately. Maybe that would be a little bit cleaner.
Yeah. So we're still doing like the final like iterations, especially on the like liquidation side. So once like the product live, I think there will be more like clear rules.
Awesome.
Thanks.
That was super interesting. Rabil, do you want to share one of the trade-offs that you guys had a hard time deciding on?
I think like there's trade-offs at different stages of building, and I think for us, user experience always comes number one, right? And I think that is still paramount. And so for us, I think it comes down to how the margining engine is, the matching engine is set up and designed. I think Aftermath's taken more of a hyper-liquid approach. What we're taking is more of a lighter approach, where it runs the matching engine off-chain, and we're looking into Nautilus now and running it inside the TEE, but also like having it done in a way where it's verifiable. So I think Sui has a version of ZK proofs called attestations that we're looking to set up, and so you can rerun the state of the order book and verify all components. So that's sort of the approach that we've taken, because we think ultimately it results in a stronger user experience for all parties involved. Liquidity providers, market makers, retail, anyone hooking into the system, and yeah, that's the decision we made to prioritize UX.
Yeah, I think it's important to recognize, we can spend a lot of time theorizing the best solutions, but then in practice, a lot of times, we realize that the theoretical solution is not the best solution. The solution that offers the best UX is often the best solution. So I'm totally with you on the whole idea of like deploy something, iterate very quickly, and just use those cycles to just provide the best user experience, and then figuring out the best theoretical, mathematical, perfect solution is not something that you want to just do like right off the bat. Okay, Neville, do you want to share one of the trade-offs that you guys had a hard time deciding on?
Yeah. Actually, I want to add an aspect that not related to the technical stuff. For us, the biggest trade-off we made from while making decision on doing a Perp aggregator is we have some part of liquidity going to be go upstream to be served on to be handle the position on other ecosystem. But in return, we can offer we can very quick in providing the support on Perp for new token on any other ecosystem with very good liquidity depth, and even the most new listed token on every chain can be supported and served for Sui trader. So I think in general it's a good trade-off, but we still thinking about some way we can keep the liquidity on Sui.
Yeah, I'm totally with you on that. I think one of the issues that we have right now is asset diversity, right? And that's something that I think about all the time. I don't know if you guys see me posting on Twitter, but like, having more assets to be traded on Sui directly through Sui without having to leave the Sui ecosystem, I think is extremely important. And right now, what you guys have is definitely one way to do it, but figuring out solutions where we maintain that capital on Sui and kind of still get that, allow users to get that exposure to more assets. That's definitely interesting. And finally, Theo, what are some trade-offs that you guys made that were hard at the moment, and any regrets with those trade-offs, or any trade-offs that you are proud of?
Yeah, for sure. I can talk about a more recent one. So we've been looking at how to deal with toxic flows, scalp trading, right? So the immediate response we had was basically we're just going to charge extra fee if you want to trade within I would say 10 minutes, 30 minutes. There's different tiers of fees that we charge, right? So obviously it's the most effective way, because most scalp traders, they profit within a 10 minutes kind of strategy, right? They probably monitoring price from stacks and trying to do the oracle latency to get a price edge, and with the expected value of doing that by just holding a position in a short time can generate consistent profit, right? So we want to prevent that, and that's the background why we added that extra penalty, or we call it instant exit fee, to prevent the scalpers. The downside of it obviously would be it's going to be hard for normal traders who want to do fast trades within 10-20 minutes, right? Because they're going to get charged extra. But I think it's still good decision, because if we keep have scope trader who can consistently profit by taking a advantage over like either the price latency or just having edge because they're like beauty bots monitoring stocks prices, it's going to be unfair for the LPs and other traders, right? So we kind of have to just try to eliminate those traders, even though you might hurt some other traders who trade with like higher frequency. But onwards, we're looking into better solutions. For instance, like building our module that can have like lower latency, so we don't have to suffer as much for like the price latency we have with PEEF, right? But yeah, for now, I think that's just going to help with the yield and with the common traders on the platform. But onwards, we're looking to like building a better solution.
Yeah, I love it. You know, on topic of toxic flow, I am also on your camp of like, you know, it's better to just identify toxic flow behavior and just penalize the behavior itself. And there's probably a trade-off, right? Like you are going to have some false positives with retail users, but there's probably, you know, a level where you just penalize enough bad behavior and maybe a few false positives, but you give a lot of good UX to like most of the other retail traders. So yeah, I'm definitely on board with this kind of solution. Awesome. We are at the top of the hour. We're a little bit over the hour here, but I want to thank you guys again for joining this X Spaces. Again, Aftermath coming out very soon. Astros is on stage 2 of their soft launch. Bluefin is Bluefin. It's been around. It's you know, it's go check them out. And FlowX, this is Perps. Neville, do you guys have a name for the Perps, or is it just still FlowX? FlowX Perps.
Yeah, it's still FlowX.
FlowX Perps. Got it. And Zoe. Again, thank you guys again for joining the spaces and sharing all of the different you know, experiences that you guys had building your Perps protocols. And yeah, we'll catch you on the next one.